Okay, so we might be all positioning ourselves for a purchase in Darwin, all right? I personally would like to see a little bit more confirmation, but overall, some of the market dynamics are similar to a very heated market like Brisbane and Adelaide. Others are showing confirmation of an upswing that's about to occur or entering into that upswing. The next 4 weeks are critical for us into this market. It's been a little bit confused, a few conflicting signals. For me to have a pure entry into this market, I do want to see asking rents increasing and the discounting in the market starting to show signs of stronger negotiations occurring. Probably just going back a step, that's a really important point there, because we saw on the last slide sales prices increasing. We saw the top end of the market moving. When sales medians increase, it's not a necessary sign, and this is a 101 gotcha, it's not a sign that the values of properties have increased, it's just a sign that more expensive properties have been turning over. The top end of the market might have been turning over. It's not an underlying. So the sales median is a very weak signal to consider when looking at and assessing in a market, but it is showing that it has started to run. All right, it's not saying to run based on offer over offer scenarios on average properties. It is starting to run because you've had very targeted negotiations in a relatively balanced environment on expensive properties. I want to start seeing another few weeks worth of confirmation of good, strong weekly rents turning over, right? And I also want to start seeing that discounting to start bouncing off zero. If it continues down to -3, -4%, it's not a very healthy sign, all right? People are, have got a lot of leverage in a negotiation. Vendors are hopeful and then disappointed. We want to start seeing that bouncing off there and turning around. So hopefully that just clarifies a couple of points there that were left unsaid. So let's assume that Darwin is coming up into a buying window, all right? And we are wanting to buy there in Darwin. Let's have a look at the city and the structure of it. Beautiful place, one of my favourite places in Australia. Really nice place to visit. You've got the airport here, you've got industrial, you've got new housing construction over the last 10 years here. So when you saw all of that supply coming into a market, that population growth coming into Darwin 10 years ago, a lot of it is around here. Okay, they've all come into defence, a lot of nice homes, etc., even down here into the south area here. That's where a lot of the population has come into Darwin over the last 10 years. So this whole area here, Palmerston, this is the area here that's, a lot of newer type housing. A lot of the population into Darwin has come into here. This is all very risky. Remember, this is a CBD over here, right? A lot of employment is through here and here. So when you're investing down here in suburban Palmerston, you've got a lot of infill still to be filled out. Look at all the new housing estates, etc., coming in here. I'm not sure if this is zoned incorrectly. This might be a longer term play, but you definitely have, this is a fair drive, you definitely have a lot of supply that can potentially come into the market before Palmerston. So this is definitely a no-go zone for me. Whilst it's great properties, it's its own individual inwards focused suburb. You've got a lot of great amenities. You've got great shopping here, a lot of good golf courses and things. It's great to live there, but potentially not as an investment. All right, as an investment, I want to see scarcity. There's not much scarcity going on around here. When our core drivers of employment and utility are all here, and you've got supply risk coming in here, for me, that's a write-off. So I'm not going to invest anywhere to the south. Then it leaves us with this area here, the CBD area, or into the north, okay? CBD area is a write-off. High density units, unfeathered and unrestricted supply. You'll be a goose to invest in the city area of Darwin, okay? You've got higher socio along the coastline. This is around, beautiful houses, owner-occupier, lower yields. You do have some investment grade pockets in and around here, but it is very limited. And once again, higher price points, lower yields, not necessarily investment grade. Coming up now, process of elimination. Where does that leave us? Once again, you've got some higher price points through here, up and around the coastline. You've got some sort of suburban residential through in here, but then you've got less, less to compare and contrast to. I like to see nice big chunks of suburbs that are similar to get that resilience. Remember these types of cities, Darwin, 80,000 people, it does drop off very quickly, all right? One layer of suburbs, the dynamics really do change. Socioeconomic factors do come into play. You've got to be very careful and picky when you're coming into this market. I like this shopping centre. I like this uni, okay? This shopping centre, for anyone who's actually been there, really high socio, beautiful aircon, really nice shops, very modern. It is just a social hub. It's attracting people to this whole wider area. And you can see here very telling a lot of new home construction here in the north. So this is now a focal point of supply coming into the market. Is that a negative? Remember, causes of utility, industrial, CBD, airport, uni, obviously beach and lifestyle, and then shopping. These are all of the causes of employment. So supply further out for me is not necessarily really a concern. I like to be in nice and tight to the areas of utility. So for me, closer to this side of the shopping centre, not over here, between the 1 point, 1 point and 1 point. So I'm really starting to look down into these suburbs here. Guys, I haven't looked at the individual suburb level dynamic, okay? We want to go into these individually. We want to look at the metrics on a day-by-day basis to pick our spots here, all right? We want to then go into the streets and target them. I haven't done that here. All I'm doing is just a common sense lay of the land process of elimination, all right? We might have to open ourselves up to 10 suburbs around here and then pick the best 2 or 3 based on the data. At the moment, I'm just really looking at these 3 for the purposes of this case study. All right, so let's start with them individually. I want to dive down into the individual streets. So this one here is Jingli. Forgive my pronunciation. This is our internal street level software that we use. We're looking at things like public housing. Where is public housing located in this suburb? This particular street pocket, 8%. So darker the red, higher public housing, 9% here. 9% here, and then this pocket in the middle, 3%. Look, overall, 10% public housing or below, it's relatively low, it's acceptable. You do need to be careful at a street level, what's next door, so be asking questions of the neighbours, the property managers. You do need to be a local area expert to deal with these types of streets, but overall, 10% is not necessarily an avoid. 15% is really starting to become, impacting street appeal, etc. This, at this point, is okay. So overall, in the suburb, okay public housing to be expected in this particular area of Darwin, but we do have one zone here in the middle with lower public housing. Something we do need to be aware of. Occupancy type, slight focus towards owner-occupiers down here in the south. As we get into the yellows into the north, good, strong tenant demand. We don't want too many tenants. Okay, we want owner-occupiers improving their properties and driving capital growth of the area through that improvement. We want pride of place. We want property ownership. There's generally a strong positive correlation between high owner-occupier levels and higher capital growth. But we still need people to rent our properties. So I don't like too many or too few investors. Generally, that sort of 50 to 65% of owner-occupiers is a sweet spot, maybe even a little bit more. That's where I like to focus. So in this market, we are sort of focusing on these few streets around here, maybe not in the north, and then we don't have, this is too fewer sample size here. We have a lot of lower density type housing. So for me, I'm really starting to zone in on these 2 areas here, potentially this pocket as my primary. We're wanting to buy houses, obviously. Green is houses. This is where higher densities of units are coming in here. We want to be buying the most in-demand property type. I've done my research beforehand. We want 3 and 4 bedroom homes. This is where they're most commonly in demand and most common, all right? If we know that people are wanting 3 bedroom homes, but we're buying down here in a pocket full of units, then we're going to have a white elephant, all right? We want to be buying a 3 bedroom home in the streets that people are wanting to live in them within, okay? Once again, hopefully this just makes sense. It needs to click. Where are the higher rents? I haven't prepared that into this spreadsheet. All right, so we've now got an analysis. This is a suburb. This is the area of focus in Jingalee. Let's do another really quick analysis here of Alawa. Once again, public housing, any areas of concern. So 8%, 9%, 6%, 8%. So once again, not too high. Owner-occupier levels. Greens, I'll prefer in these two markets. So once again, this is probably my primary around the primary school, surrounding that primary school. We do have to be careful of dormant or localized noise factors, foot traffic, influencing tenants, people poking over fences, poking their heads over fences. We've actually found from our research that 250 meters away from primary schools is the sweet spot. Too close is sometimes too close. We have to really be very sensitive of these localized factors and how it drives the utility for our tenants and then for the property overall. So this might be too close for comfort. We might be looking at this larger pocket up here in the top, sorry. This is just giving you some idea around this type of analysis that we need to do at a street level. Once again, let's just cover off on this area. No public housing through here, no red. 7% public housing here, 6% public housing here. So the whole suburb is okay. From that perspective, where are the tenants and the houses living? So this, western pocket of Nakara, this is our area of focus. Once again, there's another primary school, so we have to be careful. So it might be pushing down into this outer ring of the suburb that we would focus on. We have to be very sensitive, especially if we're not area locals, how these areas join up. So remember, it was a northern pocket of Alawa that we were focusing on, joining up here with the southern pocket of Nakara. This is how we do our localized street level analysis. It'd be great to get some feedback for your thoughts. I've tried to take a bird's eye view and drilling down now into Darwin, into where we will potentially be focusing our attention if the market was to continue bouncing off and moving from where it is. Let's keep talking, guys. Let's keep coming back into the comments and engaging, because I'm happy to drop further research or film shorter videos to give updates on this in the next few weeks. We're in this together. We're trying to empower each other. If you would like to, gather more information about how I personally invest, I call the strategy that I employ the legacy sequence. It's about buying properties that are designed to push your income into an asset base and then use compounding growth to build an equity position and then pull a passive income source out of that very strong equity position you have. That as a formula is called the legacy sequence. It's what I use and my wife Anna personally employed beginning almost 20 years ago to exit the workforce almost 10 years ago. It works, okay? It's not rocket science. If you would like us to develop a free, no-cost, 20-year wealth plan where you create your own legacy sequence, reach out to us in the links below this video. We're happy to share our calendars and book in a consultation. From that consultation, once again, we're happy to generate that 20-year wealth plan for you to take away your own legacy sequence. That's how we might be able to gather and to learn more about you in the future. It'd be great if you could reach out. Once again, over on YouTube, like and subscribe. It's much appreciated. Any feedback, sharing this with your friends, whack it up on Facebook, share it in groups and create discussion. It would be much appreciated if you subscribe to this video, hit the alert button. You'll be the first to know of any new and upcoming videos. Hopefully this has been interesting and comprehensive analysis of the Darwin market. Thank you for your time.